Okay, what's going on? Good evening. Good evening. Tonight is Wednesday, July the 16th, 2025. And what we're going to be looking at is the NQ positions that we took today. Any of them that I was posting into any of the chats. If you're in the Zen Ride Discord or in the Telegram, the free Telegram, you would probably see us talking about this quite a bit, or as well the OmniProfit Telegram. So, one thing I want to show you guys is what we'll start off with is, this is the DRC video is if you guys haven't already gotten the DRC template to follow along with these videos, then I would highly advise that you would go and do that. All right, so I'll jump right in. What we're going to kind of go into over the next probably 30 minutes max is going to be dollar index. Obviously, the futures market didn't really take any swing positions on indices. So like just the, futures trades that we take, I didn't take any swing trades on there, just really focused on futures. Um, and we'll look a little bit at where that Bitcoin trade is. Give me one second here. Oh, cool. Okay, and we'll look at where that Bitcoin trade, kind of is and where that price level is sitting in for Ethereum. But let's jump right into the DRC here really quickly because I want to make sure you guys have this document so you can start following along with these videos because these are really more for accountability for myself to make sure that I'm getting better in the areas that I need to get better and to be objective to oneself. So you guys have already seen kind of how mine looks. As you guys can see now, this is going to be the actual document. Let me make sure this is working here. Okay, so this is the actual document. And so what we're going to talk about here really quick is the pre-market, right? So the bias, the key levels, then some new drivers, like just, catalysts when it comes to like our news being injected around 7:30 in the Central Time Zone. A lot of times will affect that New York open price. And so set up expectations. That was the main thing for me today, right? Because coming into the market, I'm going to explain my setup expectations based off supply and demand and just understanding where I believed money to be sitting at, which we ended up finding pretty good areas. It's just, I would say, covering your position in a choppy market like this, you have to do it, right? When that price, when the market makes money available, you have to trail that risk, right? So, and then another thing is just, don't randomly size up, right? Today I just had a position, had a little bit of green on the table, and then decided to risk some of those profits. And that was probably the worst decision that I made because I was already probably good for the day. All right. So set up expectations. Let's talk about that first here really quick. So when you go into let's see here, make sure I got everything pulled up here. When you go into a 1 hour and a 15, okay? Here. When you go into that 1 hour and a 15, what I was seeing coming into New York would have been this, right? So this was 8 a.m. to 9. So this would have been right here. Let me make sure you guys can kind of see that. This would have been 7 to 8 a.m. So just kind of like recap on what we had going coming into New York, right? And when we were going back to this, right? This picture here, which would have, um, that's the weekly one, sorry. Okay. So going back to this picture here, set up expectations for the day, right? This one, right? Set up expectations for the day. So let me get just right here. And so what I was expecting was since you think about price, right? Think about daily open. Daily open was here, 23,016s, right? We had set a low and we had wiped those sellers at 1 to 2 a.m., right? So price came in and made a new low, right? This was a lower low on that 15.5. So coming into New York, for me, it's even crazier going over this with you guys again. I really went so extensive on it. I went to the gym. I tried to, squat my life away because it was just so easy to see now. Okay. And so they made lower low, right? Pre-market. Now, as we're coming in, right, 7 to 8 a.m., right, into the pre-market, pre-snap read, I'm anticipating a move down like this, below daily open, back inside the demand candle, right? So you kind of have to like not look at this 5 minute here for a second. Let's just do this while we focus on just this price, okay? So my focus was to see price come back into, right, that H1 demand, right? Because think about it. People were basically buying up the price, trying to get ahead of everyone, right? So most likely most buys were in this 23,050 space, right? And so that's where my head was at in that pre-snap read. Just kind of wanted to show that to understand the expectation of what I wanted to see. Okay. Okay, cool. So now what you think about is why did I want to see that? Okay. So now let's kind of put our focus. We're still thinking about you know, that pre-snap, all we have is this candle here before New York. Now, this is going to be on the 15. I'll break down the 5 and the 1 minute. Now, when we got to New York Open, the first 5 minute candle, right, 8:30 to 8:35, complete capitulation, right? Immediately from the 23,080 level, just complete, right? Now, I will say this. I personally probably would have shorted this position if 2 minutes before the session, like I'm logged in on TradingView and I can see everything, and I go to for the copy trade accounts, I go to take the trade, right, to make sure I'm set up, and it logs me out 2 minutes, I think, prior to the open, right? So I'm sitting there and I'm like, well, damn, you know what I mean? I'm logged in on TradingView, and if I press it, it only goes to one account. It won't go to all five. So that's no excuse. It's just be prepared, right? That's one thing I'd say in that pre-market. That's something I was talking about, need to improve upon again tomorrow, right? So just kind of show what I'm talking about here, right? Right. Changes I need to make from today. One of those is I need to be locked in at that pre-market, right? Everywhere logged in, no excuses. You know what I mean? So now you think about the New York Open, right? We wanted to see now here. This is exactly what I want to see when I want to see a 1 hour demand play like I was looking for, right? Is I want to see New York sell off. I want to see it capitulate. I want to see price just completely fall down into that area. And since that's what I wanted to see, when you jump into a 5 and a 15, right? You start to really see, and then on 1 minute, you really start to see what they did today, right? Because they knew that we wanted that capitulation over, and they knew that we were anticipating that when that price capitulates over at New York, that we know that when price gets past here, that breakout shorts start to try to sell to take the low of the day, right? We know that, right? Because they're trying to be forceful. They're trying to do push with the market here, right? Now, I will say that the 1 minute and 5 minute position was beautiful on how I like to read the price, right? Because we had very similar price to the previous day of the manipulation on the 1 minute at the open, which was beautiful. Okay. And so, okay, cool. You guys can see that good. So 5 minute and 1 minute setups, right? I do look at the 1 minute. I just don't stare at the 1 minute only. Okay. And so the price in the first 5 minute candle, right, New York Open, it runs up, right, and takes, right, the high on day. It takes the high on day, 20,090, and then drips, right? So inside that area, how I was reading this, right, when I figured out right here, you guys can see at the bottom the timing, right? That candle is open is when I just like pretty much right here, this white candle right here is when I figured out I wasn't logged into TradingView, right? So I started to kind of panic, to be honest. But learning tip, right? Price runs the liquidity, right? Comes to that 23,090 area. And then the next candle, right? Or in the first candle close, because you guys know I pay attention to the minute one, minute five, minute 15, and then the H4 and H1 close together when it comes to futures. All right. So on that first minute, price makes that new low. And right here, I love to stab a trade like this and put my stop loss at the top because then I can start to build into the short potentially. Or, like I said, I'm going to be able to take that trade. Risk is going to fit my probability game, right? I love about a 20 to 25 point risk on a setup. So this was a sign of weakness. Then you get the candle right here. You're looking at, okay, well, how far is that high? 25 points, right? And so for me, I was willing to put one contract on this type of trade to play down to my initial target, right? Which was 15 5-minute demand, right? 15, right? So it would have been here, did this, sorry. 15-minute demand. So the candle I'm focused on, right? And understanding I'm getting this 1 minute setup down to be able to start really tracking it off was right here, right? Because this area, make sure I got everything lit here. This area here was the 15-minute demand, right? This area here was also in alignment with the 1 hour dump candle. So from a 15 5-minute 1 minute setup, I wanted to see shorts at New York back down to here. Does that make sense? And so to miss that short, right? Because by the time I logged back in, it only took me like 1 minute. But by the time I logged back in, the price had already fell. And this is a good example, right? The price had already fell. The 5 minute candle was just vicious, right? So let's go back to five here. The first 5 minutes, you have 23,000, 70, let's just say 75. And the close of that candle was 23,026. Let's say 25. So a 50 handle move to the downside in the first 5 minutes of New York Open. Okay. And so you really don't like, I mean, now you're now like to look at everything based off the timing, right? So like here's 32 to 33. 33 to 34, 34 to 35, and then the next candle would have been a new 5 minute candle, right? So like if I scroll over one candle, do you guys notice that? Boom, new 5 minute candle. So right here, this is where, yes, you probably can find some, good shorts because you have a good structure break, lower low, and you have a candle of supply to play, right? Now it comes down to a question of do you want a 20-point risk? Do you want a 15-point risk? Or do you want to be very tight, right? Me, I personally am not going to take a trade where it's that tight, but I'd probably take one around a 15 right here to then play down if you guys are looking left, right? We're always thinking about break a structure, right? Is where we can pay ourselves, or we can trail risk, or we're thinking about 80% of the range, which is supply demand, right? So getting down below, these noobs in this area here, right? And so this was a good setup too, but I was being hesitant because I was like, well, now since we made this was like my sign on the 1 minute is we made this low here, then we shifted back up to that area, right? So you could frame up an edge, right? To then get lower back to demand or 22,950. But for me at that point, I was like, okay, well, if they come right here and I sell this here, they're gonna probably push it back to like the imbalance and then take the drip, right? But when you actually look left and you look at that 5 minute, there's not really a supply candle over there. It's just manipulation, right? And when I see this, why I do get excited is because I know at some point of the day, right, because of how this was engineered at New York, that they're going to come back for the high of day eventually at some point that same day, right? And that's what we've seen after the capitulation. Now, one thing I'll say is the first area that I'll show you guys the first area that I basically took 15.5, and then I'll go down to the 1 minute to show a little bit more detail of what was actually going on. Okay, so that kind of shows you guys, like I was talking about with this document, right? Is that was a setup expectation. That's exactly what I'm wanting. I'm wanting to see New York shorts after buyers are, in profit from all night, right? I'm wanting to see it sell down into demand and see if there's two things that are going to happen with those shorts, right? Those shorts have the option to pay themselves at 80% of the range or wait for the structure break, right? And so if they don't, if they start seeing, that the price isn't going to break the structure, right? Like the shorts, right, from the New York, like you've seen today. Now you've got to go to bigger time frames, which we'll talk about here in a second, to see if they're actually selling off. All right. So okay, so that goes. This is still building into our bias and our expectation. Okay, and so this were now what I want you guys to focus on, and what you want to follow along with is grade yourself. Like to me, today was a D grade day. It was just, I'm in hindsight better, right? But what you want to do is as I go throughout the document or go throughout the breakdown, start highlighting these key areas, right? These key parts of the session: 8:30 a.m., 9 a.m. 10 a.m., 10:45, 11:15, 12, and tell yourself what you're seeing. And then you can also keep yourself, what I call the call sheet card, right? Which looks like this. right? So these call sheet cards, is this a new one? I don't know. Yeah, so it just look like this, right? I just write down here, I write down exactly what I see, right? And then I have another book over here, which I write down what actually happened, right? Because you got to be able to understand as the objective observer how to be able to take from what you see and feel and change the action that you actually take from that, right? And so that's where I want you guys to follow along with on that part, okay? And so now when you think about how they engineered those shorts at New York, it only made sense on a higher time frame to see buys at some point. So where did I try the first buy? It only made sense for me, right? When price got down to here, right, which was 8:55 going into 9, right? So why did I say that time? Right, we've gotten 8:30. We know what happened. Manipulation on the highs and a sell down to demand. Right. Now we're talking about 9 a.m. Right. What happened here? Buyers stepped in at the 22,950s to defend the 15-minute demand candle. Right. And so for me, this was what I wanted to see. Right. I didn't get the shorts down, which I thought were, actually pretty good on 15.5 1 minute. But what I waited for was price to capitulate here, 850 to 855. Then I had a sign of strength, 855 to 9. And then I had a second candle sign of strength. Now, if you played this position right here at 9, most likely you put your stop on the low and they ran that low, right? They ran that low inside the demand. Now, how did that look on the 1 minute? That's what you really have to go and focus on. Okay, so 5 minute, 1 minute price action here. We're talking about second candle and then the run, 905 to 910. What actually did it look like on that 1 minute? And I'm going to show you guys right here. All right, so myself included, right? My first position I seen on the 5 minute was the second candle, 9 to 905. And I started to look to long positions on the 1 minute so you can see what it looks like and how I got stopped out. Right. I started to long positions like this with the risk of about 10 points. Nothing too crazy. Wanted to see if I could see some bullish price action, right? Some higher highs, some higher lows, kind of like you've seen here, to play into, right? Now I took that trade more over here, right? And then they went up slightly and then they dumped the candle, right? But I want you guys to write this down if you want to learn anything that I've learned from price action and reading 15 5 minute 1 minute price action. This is a mantra, okay? A mantra. What is a 5 minute wick, right? What is that actually on a 1 minute? It's a 1 minute dump mitigation play most of the time because a 5 minute wick, like the actual print of it, looks like this. When you look at a 5 minute wick, it's gonna look like this candle right here because that's what it is, right? And so, what did they do, right? All they did was they flushed out early buyers, right? Price dumped, makes a new low, but then what did they do right after in the 1 minute that was classic perfect, right? You had a shift in price delivery here, right? Price went higher, comes back into the area and gives a better favorable R&R risk setup, right? Because think about it, we played here, this is what it would have looked like. So just kind of give you guys an idea of what this setup actually looked like. Um, all right, price had capitulated. Shorts looked like they were, starting to slow down. 15 minute and 5 minute demand, they were starting to hold. You had one sign of strength. And so it looked like this. This is what I was basically trying to gear up right here. I was wanting to take one contract here. Risk was where you guys seen it at the lows. And then TP would have been attacking the New York shorts. But also, I'm also always thinking from a range perspective. Like we had a high on day and then we had a new low on day, which was where we were at currently, or where we were had here, right? So I was taking this and I was understanding always equilibrium of the day or from the fall to the closest low that we have. And so like I wanted to see, like I said, this here, I don't know why it went off, right? Stop loss just at that low, and then a TP of getting like back into like if you're looking at that 15 or excuse me, that 5 minute on the left, just getting right above this 23,050 level, getting these individuals who shorted a little bit late, right? Like we talked about, right? Because that first 5 minute candle fell so fast, essentially you would have had to force your way in to the setup again, right? And so that's what I was looking for, obviously. They had better plans, right? Bam, they knocked that out. But here's one thing I've learned from, trading and doing this for a while. When you get stopped out, right? A lot of the times you're getting stopped out just because you played a little bit too early, or I mean, that's for sure. And the other is that's part of the game, right? The cost of doing business sometimes is losing trades, but if you're playing on edge, it's okay. Okay. And so that's kind of what I was looking at when we're talking about this setup here, was got 1 minute flushed, right? So now what are we looking for though, guys? We're looking for candles that take out traders and rebalance price, right? So these are the candles you're actually looking for to happen. And then after those candles, why doesn't price just keep falling? Jordan Morgan says it all the time. Why doesn't it just keep falling if it's going to sell off, right? Immediately you get a shift in price delivery, right? So right here, as soon as this happens, just kind of give you guys an example on that 1 minute, this is where I came back in and grabbed my second order. Is now that we've shifted in price delivery, oh cool. Now I understand that we're defending the 22,950s. We have a shift in price delivery. Now we're starting to see a buy mitigation, possibly setting up. Right. And so I was like, okay, cool. I lost a trade. I'll take one here. Right. So waiting for price to pull back into the area. And that was the best. That's probably going to be the best spot that we'll get for I would say for the replay mode. I would say, let's see here. See if it goes back one more. Okay, so let's say you got in here. So now let's think about R&R. We're thinking about in live time setup, right? Now think about also this is 9:15 a.m., right? So you're wanting to focus on the first 15, the last 15 minutes of the hour, right? And so like for me right here, I ended up framing up on a 1 minute perspective, right? Like I know you guys are still seeing that five. Let me kind of pull that over. Still seeing just the location of the five. We have the 15-minute demand, we have the 5 minute dump, we have signs of strength on that side. So what I was wanting to see was price respect this area like this, right? And what is the main thing I'm always talking about? Counting up from the edge, right? So let's just count up from the edge here first. So this would have been your stop loss, the 5 minute, 15 minute, or excuse me, 5 minute, 1 minute low, and you're counting up into the demand candle, right? And this is what really shapes the probabilities is based on, from the edge of what you're risking, how many points is it? So I love 20-point risk, right? For 60-point games, right? Because that's a 1 to 3. So just getting back above, as you guys can look left, right? Getting back above daily open, but also getting right back above that wick and inside the supply candle on the 5 minute, right? Because why are we trying to target these areas? Because the shorts, right, from New York, the banger ones, we already know the best ones are probably like right here, right? And then the ones that are like late are probably like not late, but they're just a little bit lower are here. So where do you think, now let's look left, where do you think the individual who shorted this one that I told you guys that I said, oh, I don't know if I just wanted to wait for that capitulation bounce play to find the buy. Where do you think this individual put their risk? Right here, 23,050. So why are we targeting these areas when we see a shift in price delivery like this? Because we know those shorts are going to cover because of their location of their setup. All right. So let's say this here, we're looking at this, it's in our area, bam, right? Stop loss goes where we said, right? TP above anywhere above daily open and anywhere when it gets inside supply. Now, we're not just this doesn't have to be our TP, but this is a target area. And as price starts to make money available inside this zone, we want to focus on specific things as it goes up. Okay. So this is kind of the setup I was looking for on the second try. Experienced like a second, a drawdown, and then price started to go, right? Now, right here, when this price breaks out, right, this would have been 920 to 925, right? Price breaks out right here. At this point, you have a couple options, right? Or you're looking for specific things. I'm looking for more expansion and I'm looking for price to get above daily, right? Kind of plays around in the area. And then bam, goes straight to the area. So now at this point, guys, what I personally did because of how I played the trade is I got in inside this area here a little bit higher. I think it was like 76. So let's just say like right here. And so at this point, I trailed risk to here, right? Because we started to move in my favor. And then anytime, you guys can go check the chats, right? Anytime we go above daily and we push that fast like that, I'm going to protect myself. I always protect myself or pay myself at point of interest because I know if we don't get past the area, as you guys can notice here, right? Like this pushes up right to the area, goes into 5 minute supply. What happens next? We fall back over into that 15, 5 minute demand mitigation, right? And then extend higher again. So you've got to be, you can't just be marrying one situation. You're going to have to be able to adapt and change and not change your whole bias, but you're going to have to be able to adapt. Okay. And so this was a good setup, right? Price ended up going to above daily open. We were able to cover and we were able to have a small win on our hands at this point, right? And so I'm going to undo this just for a second. And then, okay, so then when you look at this price, the 5 minute, it closed right here, 920, 925, outside that area. I said, okay, cool. 925 to 930, we're looking good. 930 to 935, we're above daily open, right? Now, at this point on this trade that we took right here in the 976s, right, we started to trail risk to here. Now, when price came down 941, as you guys can see there on the right, it started to test into that area. 941, 942, 943, 944, 945, right? By 947, price was starting to close higher on the 1 minute to attack again back above daily open, right? Now, what I can say here, because you can't anticipate a move like this, was if you go and you think about it, our risk on the original trade was at low of day. So a lot of people at this time, if you guys go back and look at this flash 950 to 955, a lot of people got shitted on this trade. But like I said, we had two contracts into this. So right, so one contract that we had moved up, the other one was still at that low of day. So price then flashes, right? And people start thinking, oh my God, and they start trying to like, it goes lower low here. So just for example, right? I seen it go like, so I'm watching 5 and 15, right? People are impulsive or watching this once. It goes lower low, comes back up here, comes down, and people start trying to like sell it right here, right? They're trying to sell down because they're like, oh shit, price is going to sell off. But we're watching 5 minute, and all we're seeing is price closing into the 5 minute demand candle, as you guys can see here, right? And so it takes out one of our contracts for a small win, right? And then we had our risk here, and then price extends up, goes higher, right? Than this candle here, which would have been that 5 minute area. So like just going higher than here. And what I ended up doing is I trailed my risk to the down candle in the uptrending market. I didn't know it was going to fall this fast, right? If you guys go back in the chats and you look at the exact time that I sent, matter of fact, I'll just show it. Um, but if you go in the chats and you see when I said I'm leaving here with something, I trailed my risk up to there. So this was another not bad. Like as I'm looking over this, it wasn't a bad day of trading. It was just how the day ended at the like that to this point right here, everything was still pretty okay. Um, so I think it was right here. Let me see. Yeah, I just kind of want to see the timestamp so you guys can understand what I'm saying here. Because what you see and what you feel and what you do are different things, okay? So think about this, right? Where is this at? Okay, cool. It's right here. Okay, so look at the time. This is me in the chat. This is me, posting a meme. But 10:15 a.m., I'm leaving here with something, right? Because I already understood that if the effort isn't high enough, we're not just gonna push, right? I sent this to the group chat at 10:15. 10:15 is here, right? So there's no way that, I had gotten this to fall yet, but there was no way to know that that was going to happen either. I personally didn't see that coming. All right. But the one thing I will say is since I had already lost one contract and price moved and made money available in my favor by trailing it up to this candle here right under daily, that really helped me out on that fall, like the 5 minute candle, or excuse me, yeah, the 5 minute candle from 10:15 to 10:20 that made the lower low, right? So at this point, I'm still okay. I'm still happy. Like, let's see if we can find a setup, whatever. Okay, so now next setup, right? So pretty good, trading through here. Wish I would have had the short at New York. So I'm pretty much on tilt because I'm pissed that, I wasn't signed in just 2 minutes before. Thought I did pretty well here managing. And then you come into 10:23, right? So it looked like this. So let's go five and let's go 15 and 5 now here to see the what it was looking like for me, and then we'll go to smaller time frame. Okay. Okay, so now let's kind of move our focus to the 5 minute candle, right? On the right here. And so what I seen, right? Actually, let's do this on a 5 minute, 1 minute. That's gonna make it a little bit easier for my snipers. Okay, so 1 minute here. So just so you guys have an idea of what I was seeing, and like I said, you're not going to win them all. You attempt things, right? So right here, guys, if you guys notice this 5 minute low, so we ended up making that low. So I'm looking for that capitulation short covering, right, to be able to possibly bounce from where the high was made to wherever they make a low and get back up 50% of that type of play. Okay. And so what we ended up getting here, this was 922 to 923, 923 to 924, and then 924 to 925, the 5 minute candle close, right? We had, I believe, right, a 1 minute mitigation starting to form, right? So what did I do in this situation here? I started to look, and this is a little bit early, right? Because I didn't have my 5 minute signal. I was trying to play it very aggressively. Now, the reason why I was playing aggressively though was because when price would move in my favor and make money available, I would trail risk. All right. So, for example, another setup that went like this was we had the sign of strength, just like that. Now, don't get caught. And this is something I used to do, trying to buy here, 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 and price pulls back and does this. Right. So I've done that too many times. All right. So I was waiting for this situation to, pull back right into this candle like we see here, right? Because now you have a demand, right, to frame up edge, right? So that is demand, and you have a low, right? You got to trust your risk placement. So for me right here, I thought this was a good setup to, now you got to think from what, I always say this, but, edge is in the eye of the beholder, and so is liquidity, right? So this was a 16-point risk, and then just getting above this high right here would have been so that's that 5 minute high. If you guys notice, it's right here on the 5 minute, getting above that 5 minute 1 minute high, 22,990s. That would have been about. Let's look at the R and R on this really quick. All right, the R and R on this was over a one to four, right? Over a 1 to 3, 1 to 4, right? So this looked really good, and I thought that possibly this was a good setup to attempt. So I attempted right here, basically almost in the same area, but I got 22,920s. Like I said, stop loss went at that low, very small stop or a very small stop, and then was planning to build into this trade and then give back where above daily open. But if you guys look left, right, look left on that 5 minute, right? That's inside daily open, but also where is it inside of? Giving back position drives very something we're going to go over later this month. Inside supply, right? On the 5 minute candle, right? So you want to be giving back in the same areas that you would take a great short. So that's pretty much what we were seeing here. So this was the next attempt. I already showed you guys the first attempt. This was the next attempt, all right? I believe Price came back once. No, Price never came back. So this time here, this is the same situation. We had scratched over here, had a chance to win when Price gave made money available, trailed risk up, small win day still. So I'm like, okay, cool. right? There's no reason to risk anything on this trade. Price went to right here, right? Then I said, okay, we're getting ready to close above here. We're breaking out 22,950. I'll secure 22,950, right? This was at 10:30, right? Right before we were about to close a 5 and 15-minute candle, right? 10:25 to 10:30, right? And then also this was, like I said, the 15-minute candle closing, right? Right here. So 10 to 10:15, and then you had 10:15 to 10:30. So this candle was building up into basically your close. But I will say this, right? After making the lower low, this is almost like a turtle soup. It's like, playing it without a 5-minute sign like this and then coming back and giving you the five. That was why it was so aggressive. But the management was still pretty good on this one as well, right? Now the difference was um, on this is I had started off with two contracts, right? So I started off with I didn't play it just like this. I had two contracts and then I moved one up here and I accepted risk on the remaining one. Okay. And then price pretty much got up to here, took out that first one, I accepted risk, and then it just completely fell over, right? And takes the lows, stop loss, right? Then I'm at a loss, still very small, like overall for like my day, right? So I'm like, oh, okay, I'm good, whatever. And just completely, like I said, just continued, kept hacking on that 15 and 5 until this is the whole, end of my rant of what I wanted to show was we wanted the 4 hour guys, we wanted this play, and it's just not always going to play exactly how you want. But we wanted, right, the 4 hour demand, right? So this candle right here, we wanted to see price come down and capitulate fast to that area. Now, same thing when you look right on the 1 hour. We wanted price to come inside this H1 candle under this wick very quickly, 22,850 level, right? We were looking at this level pre-market, right, as a level that lined up with supply demand. So 22,850s, right? Yes. So we were looking at this level and then we were looking right below at the quarter, right? 22,825 just to kind of see, but like right here in this area is where we want to see. Now, if you guys follow fib retracements, you know, from the 4 hour low to this high, right? You can see it on the 1 hour. That was a beautiful fib retracement, guys. Beautiful 88.6 retracement, but it's just about what's going on in the small time frames that create wicks, right? So moral of my story is they kept us up here, right? On the range of things, right? This is the range low, this is the range high, and we are essentially playing at midpoint. That's why they played lower at the discount area, right? It's just what it is. And so we knew we wanted that area from the beginning, right? Um, Now to end the day, I think where was this at? Let me just make sure I'm recapping right. So when I lost this trade that I just showed you guys, I was done for the day, right? Ammo wise for like my personal DLL, I was like, okay, cool. Like I don't use Top Steps DLL, I have my own DLL, right? And so once I hit that level today, I was done. And so I already knew that, I was gonna have to sit here in agony and watch them come to that H4, H1 demand play. Now, guys, don't put it past them either, right? Because this was a daily demand play. Like I mean, I don't know how you guys look at it, but like when you look at it right and you look left, this candle here has and the monthly open for July and the market open was respected, right? Now I'm not saying we're completely going to go bullish, but that happened today as well as that alignment of that 4 hour and then the alignment of that higher time frame 1 hour demand play. Like I love these type of setups right here, right? And so when we go back to see the end of the day, what I do want to show, right, was how the end of the day actually formed. So we have a 5 minute and then we want to go 1 minute here. And then we'll wrap this thing up here in just a few minutes. So now they had pretty much, at this point, I don't think a lot of people have even made it past this area, right? Because you have to have, I think, experience in trade management to get through this chop right here. But at this point, I would say if individuals lost here, because I trailed risk up and still lost the overall trade, I think people were done at this point. And then, like I said, looking at the higher time frame, you're like, wow, it's the perfect area. I mean, look at the POIs that we have, monthly open and market open. Now, the timing on this stuff was a little bit off of what I like. I like the first 15, last 15. And I know that like the ICT type of traders like take their trades up in here, like after the 5 minute has extended completely up. So like for me, I mean, I was looking at this like just like I said, in just complete agony at this point because I've seen the perfect setup, of course, right? So you don't know what's going to happen at this point right here on a 5 minute. All you know is prices jackknifing. But one thing you do know, like I said, from a 1 hour perspective, is prices jackknifing and wicking into demand, right? Those sells, right? When you think about the sells from New York, or you think about the sells from yesterday's New York, right? Thinking about CFD and swing trades, those individuals, they want, like, if you're short on CFD, if I am especially, I want to see a capture of the liquidity of these lows, right? I want to see that push because that's going to give me the opportunity to, as the money make or as the money's been made available, right? On the downside, I'll be able to trail risk down to secure more and more, right? So you got to think like that's how they're thinking, and they're not getting that. Then what's happening in here, right? If shorts aren't getting the objective low, they're covering positions, and you can't see it on a higher time frame because you got to understand the mantra of it. A 1 hour wick, 15 minute, 5 minute dumps, all the stuff I talk about, right? So coming back into here, like it's just an understanding, right? If the shorts aren't getting the break and the break of structure and the objective low, then that's what's happening. Okay, so then we go back to that 5 minute, and usually I like to see a sign of strength in the five and play a 1 minute mitigation, but they haven't been presenting that. They've been doing this, right? Pumping the candle where you don't really get a chance. They don't really, make it on a 1 minute to where the pullback's very big. They don't pull back. If you guys can notice when I do that pullback from like this area here on that 1 minute, right? When price is at that high on the five, they don't pull back into the 5 minute demand candle as much recently to go higher, right? So you have to be understanding when you have a 5 minute dump and then a timing type of trade at point of interest. So I like again, this was an area just this is more in hindsight, just to kind of finish up and then we'll talk kind of what I see for tomorrow. But going into this before you got that 5 minute explosion up, what I would and at the low of day, 1 hour H4 area, right? What I was seeing was this. This was what I thought was a beautiful entry, right? You had the dump candle, you had a sign of strength at 1037. You had another candle that stayed inside that area at 22,850, and then you had an extension higher. Then you had a candle open, kind of reach down, go up, right? And then come back and print just like that inside of a 1 minute demand. So when you think about a candle like this and framing up an area, how I like to look at it is you had one sign of strength, you had a second candle, right? So the open, price kind of went down, then it closes. This candle opens, right? Opens and then closes. Right here in this area, I like to personally because like if you want to be very tight, you're going to take this trade at the point of interest, so at market open, and start framing up that edge low. Now, that edge low was a 29-point risk, right? So now you're starting to get very technical on how you enter. And like this is just more technical on how I enter on a 1 minute. But I take that 1 minute dump candle, right? And I want to be under the 50% of that candle. So this would have been too late for me, right? I would have wanted to be right here, right? To be able to condense that down to what I want, the game I want to play, which is 25 to 20-point risk, right? And so to get up, you know, to the top of this 5 minute candle is like right above it. All I wanted to see is if we could get right around to that 1 minute supply area. That's over a 1 to 5 setup, right? And so this looked pretty good. Like I said, I wasn't a part of this. This is more hindsight. But as I was watching it in agony, I was like, wow, this is a pretty beautiful setup and how this is all forming. And then essentially what they end up doing, they went up to that 5 minute supply candle, right? Supply candle, wicked into it, right? Where? Daily open, right? Wicked into that daily open and then started to show some rejections and then ended up closing the day, going higher again, right? Inside that noon time. So just kept going, blasted past that liquidity of those shorts. Now, who did we blast past? Just want to show this again, right? For we understand where this buy take profit is and why it was here, right? In this area. Because most likely the individual did not, right? Like we talked about, even if I would have been logged in, it probably would have been hard. But I think if I'm logged in, I think I take this short, me personally. But most individuals aren't waiting, aren't reading the tape like this. They're not seeing the break of structure and then taking the trade here, putting their risk, right? Most individuals on a 5 minute, I already know, are going to be somewhere down in here after it already showed that sign of weakness, and they're waiting for, candle to pump, make the low here, like I said, and then play this area, put risk here or here to go down, right? So that just completely made sense to, the short capitulation bounce play back up to that area, which was, I thought was a great target, 22,050s. And then, right, later on in the day, in the second half of the day, they did go ahead and complete, right, what I got here. They did go ahead and complete um, back up to, right, taking more of that candle that was, I thought was, like I said, it's a force candle, taking more of that candle, right, so to the 23,067s. And then later on that day again, 1340, so 140. And then they shifted in price delivery here at 155 going into two, right, coming back and taking back that New York Open price, right? So just kind of see how it looked on 5 and 15 here. All right, they came back for that 15-minute supply. So I'm gonna move this out of the way. They came back for that 15-minute supply open. So we're focused here, just like where my eyes are at right here, right? They came back for that area, and then they came and took this area, right? Running higher. And then I knew at this point, obviously, like I said, I'm not in this trade at this point, but as they continued to make, right, price action wise, all right, they had a high here. They came back. They respected daily. They made that new high. Right, so price is making higher highs, higher lows, higher high, higher low. I had a feeling they were coming for a new high on day, whole level 23,100. Right, and then going into 310, we've seen price just kind of fall off. Right, as buyers were probably just taking profit. So I know that was quite a bit when it comes to NQ and just understanding, but that's kind of how today went for me. Ended up being a losing day. It just is what it is. It's cost of doing business, but there was opportunity, right? But the execution just wasn't as flawless as I'm used to, and there was quite a bit of news catalysts, right? So let's go back to the DRC just really quickly, right? There was lots of news catalyst that was definitely in today's sessions, right? Because Donald Trump started talking about Jerome Powell not being, the head of the Fed and firing him, and the markets just started. Literally, there was two times a day where they just flashed. Where if you didn't have your stop loss or you were playing small time frames where your risk was, internal, you were getting clapped, right? So I was grateful to be, playing edge, but that did really affect the market. So that kind of, goes into some changes that I want to make today and just adapting, right? This is why I do this is, you don't have to be super sized up right now, right? I can size down, just get some base hits, making sure I'm just, getting, my goal is like $1,000 a day, right? So just hitting that goal, right? Of my base hit day is 200, 250 across the 5 accounts and, win setups, right? Not try to beat the markets, but win setups, right? Because we have a lot of things going on. We're at all-time highs. There's lots of things that we can't predict are going to happen. So we have to be able to execute on what's actually available. Okay. And so really quick, we'll kind of jump into what we're looking into for tomorrow for NQ. And I'm just going to focus on NQ for right now for tonight. I may start bringing in like other futures later on. Well, we'll finish up with other futures like overall, but just kind of focus here on NQ. But let's go ahead and move this over to the end of day. So 1700 hours tomorrow, which obviously 1510 is where we end tomorrow. But I just like to give it a little bit of room so I can see. Okay. Supply, demand, etc. Okay. So we're going to remove these. Oops, not that. But we'll remove that. We don't need this down there. This was now previous day low. because of where that is. It's the previous day low. That range low is just basically the week low, the low of the week. All right, so we're just keeping up with price action here on the H1. This was the high of day yesterday, which was the previous day high. Actually, excuse me, no, it was not. This would have been the previous day high right here. All right, so we got previous day high right here already lined up for tomorrow. And you can see, right, we rejected off yesterday's daily open inside 50% of this candle. So I could see us still continuing up, but I wouldn't just start buying it or anything right now. Like I'd want to, overnight players, you want to see what they're going to do. But as of right now, when you're looking at the open of Thursday, right, 1700 hours, Thursday open. All right, we'll move this New York, so I don't need that price. Um, you can see, right? We could go back down, right? We could push down into these areas. So I'd want to see what it looks like on a five. Key level for me tomorrow, right? 5 minute demand play, 22,900. So if we're down there, I'd be interested to see what they do. Now let's look at a little bit higher of a time frame. So 1 hour will be here, and let's look at 4 hour for our direction. Okay. So we got that bounce off 4 hour demand play, right? 22,850. Then we have higher open, higher close, higher open, higher close, shift to price delivery. So um, pretty much for me, let's just say this, right? This candle, I'm going to show the candle I'm focused on, right? This is the candle I'm talking about overnight tonight. This, oops, not trying to do this candle right here, right? If price stays above this 50% line, so like here, let me just kind of show this here. If it stays above this line inside this demand, right, and absorbs off the 4 hour demand plays, cool. I think we move higher to 22,150, right? And then not only is this previous day high, right, this is also all-time high, right? So we always want to have that in our understanding here, right? So previous day high is also the all-time high. So will we get absorption to go up into supply, 23,150, right? This big up candle here on the H1. Or are we going to capitulate because of some kind of news and go below the 22,775s, right? Because this is the start of the week. This is where we're at. And then this will be the end of the week right here. So we only have so much to go when you think about 4 hour and H1, right? This is the end of the week. This is supply demand. Okay. So dollar, just really quick to finish the call on, right? Dollar chopping being kind of crazy, but overall, when you look at a weekly daily, this week looks bullish. Dailies are looking pretty good. Had a slight pullback yesterday, but it does look like we could come for this weird price. I don't know if you guys noticed this weird opening candle here when they opened at 150 and then just started selling down ever since. But the way that that opened, when you go back and do a replay mode of this, very interesting because at this point, I would say that if you're, taking Forex trades, I used to trade Euro USD, GBP, all that. If you're taking trades, right, you're really evaluating dollar. You're thinking higher dollar, right? Possibly mitigation off the 99 level, 101, maybe 102, right? And you can, be looking at your other plays off that. Now think about that, right? Go back. Let me go back a bar. Sorry. Right, you're thinking, okay, I'm short Euro USD, great play. Bam, then you get something like that, right? Now, for me, I would think because they gapped up and went back into the area, they're trying to trick people to short it, which I would have been tricked if I was still trying playing Forex, right? Because they just pretty much at this point just wrecked those lows and just went lower. And now what I think ever since we've gotten from that point, what we're seeing like here on daily to the current moment is from that moment we're seeing the short start to cover that position from a technical type of standpoint, right? But that's only because since the start 2025 open, right, we have capitulated technically and made a new low, right? So I'm anticipating some short covering, maybe up into here, right, or maybe to this level we talked about. All right. Otherwise, dollar devalues and we fall back lower below 95, which obviously could happen based on where we're at on the monthly here. So I don't want to overload you guys, but I hope that helps out on NQ. I thought that from a perspective of, monthly open taps, ES and NQ were really, really nice. But this was a very choppy session, right? You had to really be on your edge, especially when it comes to NQ. And I think tomorrow is going to be, it's going to be really nice. I think it's going to be a pretty good day. Just this is a market and a season where you really want to play A to B and just play your game and win setups. Don't try to beat the markets. Really just try to win setups. So with that being said, I appreciate you guys watching. Like I said, drop some things in the comments, things that you want to change, maybe things that you don't really understand. I need to go over, or I can articulate the message a little bit better. And let me know if you guys are liking that DRC template. But with that being said, again, I appreciate you guys watching and have a good rest of your night.